Hello and welcome to Weekend Investing Daily Bytes. We are doing the Ask Weekend Investing round after several weeks, and we'll try to do it on a weekly basis here on. So this is round 22, episode 175. We're shooting it on 4th of February. Let's first take a look at the markets today. So markets overall were very flat, almost non-directional, and reacting to overseas cues from the US markets mainly, which have been soft and been very volatile actually on back of big tech, on a daily basis, some stock or the other going up or down 20-25%. And FI selling, of course, having resumed again post this few days of the budget flurry that we had. So real estate, PSU banks, autos, public sector enterprises were softer than the rest of the market. And metals and commodities, as the dollar index is falling, metals and commodities have started to pick up a tick on that front. So overall a very sideways kind of day, with Nifty losing 0.3% and Bank Nifty losing more at 0.6%. As you can see here in the broader indices, Nifty Next 50 flat at 0.08% minus, CNX 200 minus 0.29%, CNX 500 0.3%, and small and mid caps were where there was more damage than the larger caps, so 0.6% and 0.7% having lost there. In terms of weekend investing, small cases, MI25, MI35 both still doing very well. MI-NNF 10 picked up at plus 0.72%, and MI50 and MI-ATH2 lost some ground. Rest were all pretty much in the flat territory. So coming to the Ask Weekend Investing round, we can see that we have all the previous rounds available on the Weekend Investing Hub, and with each round we have addressed 30-35 queries. So there's a huge question bank that is already available there, maybe to the tune of 600-700 queries. And the links of which of the Weekend Investing Hub are there in the description below, as well as you can find them on the YouTube channel. So this is a huge resource. Anybody coming into weekend investing can go look at these. The questions are indexed in the descriptions, so you can go very quickly over which questions you would want to be answered, along with the other articles and vlogs that we've created on Daily Bytes on various content pieces. So if you spend some time on the Weekend Investing Hub, I don't think there is any question that will remain unanswered. And those few that are there, we are happy to take them here in the Weekend Investing Ask Weekend Investing rounds. So the first question is from Vinod. Hi sir, what is your take on ATH2 performance since launch at nearly 20% drawdown levels and huge churn rate? What kind of investors' mindset are suited for this product? Should existing long-term investors remain confident with the product and ride the wave? Okay, so the next question is also on ATH2. So let me combine these. Some strategies like ATH2 don't perform well unless there is a bull market or up wave. Shall we stop investment in that case of such strategies? So my answer to both of you gentlemen is this, that yes, ATH2 and ATH have not performed so well recently in the last 6 months maybe, and that is largely a function of the design of these strategies, which are designed to do well in sort of raging bull markets and sort of remain soft in the rest of the periods. Now, whether you should stop investing, I would not recommend that. But at the same time, I would not say that you be invested in these strategies as your core strategies. These are strategies which you should add on to your bouquet of investments beyond your core strategies. Like core strategies could be AllCap or could be like MI30 or a combination of NNF 10, MI20 and MI35, for instance. So those are sort of core strategies which are lesser sort of volatile and less risk-taking strategies. These strategies, because they are designed to give very high returns when they do, obviously when they are not doing so well, they will be a bit painful. So from that perspective, if you treat them as, the high beta part of your portfolio, that when they do well, they hopefully will do very well, and when they don't, they will hurt a little bit, but let it be in conjunction with the rest of your core portfolio. So that's what I would think about these strategies. Next question is from Abhimanyu. How about a new small case involving 25% of PG-invit Okay, so it's a recommendation for adding real estate REITs to momentum stocks. So we have not done this study because there's not much of history available for these REITs, and neither do these REITs move a lot. But yes, we can at some point do this study, and instead of adding gold as a hedge, we can use the REITs as a hedge, or the N100 ETFs as a hedge, and definitely consider that. So good idea. Thank you so much for this. We'll definitely do this soon. So I hope my office will note this, and we'll do this soon. Next question is from Vivek. Alok sir, do you only manage the strategies, or is it automated as well? Asking as an investor, as we have only one person to rely on if we look for long 20 years horizon. So we are now a larger team than before, and the strategy part is still with me, and the operations part is with the rest of the team. But as time goes by, that will also be sort of decentralized. So as long as in terms of institutionalizing the processes and the company, we've already gone into a corporate structure. So gradually we are moving towards that path where you will not have to rely on one person. So if that satisfies your query, I think we are on that path. Next question is from New India. Is it wise to invest during the falling market in weekend investing small case, since they are on momentum theme? Using the above path, will it make sense to take advantage of drawdowns? So it is always advisable to gradually bring in your money. Now, whether you should invest during a falling market or not is again dependent upon how you behave when the market starts to rally up. A lot of people are very comfortable in bringing their capital in gradually without worrying about timing. There are others who don't want to do investing while the market is falling, but they are happy to aggressively add when the market starts to rise. So it all depends upon how you are able to approach the situation. The simplest way is, of course, to do a weekly or monthly SIP and not worry about timing. I do that for my money. But if you are more tuned in to timing the market, then you can use some simple indicators, some moving average crossovers, some triggers which can tell you that you should aggressively move into the market again over and above the strategies that you are doing. But if you take advantages of the drawdowns and you are willing to wait, there is no problem with adding there as well. Next one is from SA. If one is subscribed to multiple weekend investing portfolios, if one is planning to add some amount, one should choose a portfolio which has done well recently, or the one which is doing badly, as an opportunity to buy on dip. So good question, but I don't think I have a sort of a analytical answer to this, that we've studied this and this is how you should do it. Most strategies, what I've seen is that we'll go through bouts of underperformance and overperformance. So investing in strategies which are underperforming could do very well as they come back up and match the sort of median performance. So my sense would be to maybe not try to do this on a selective basis, but more as a systematic basis where you are allocating to each fund. But yes, strategies which have done extremely well in the very recent past may become very, very aggressive to keep adding to those capital at the same pace. So the Weekend Investing Hub has all the statistics on past 1 month, 3 month, 6 month, 12 month portfolios, and all the daily indexes are also there. So you can chart the daily index and find out the performances on a short-term basis also there. I hope that answered the query. Next is from Amit. Your thoughts on calculating momentum quality. How can one compare momentum quality if, say, both stocks give the same returns over a period? Is it volatility, beta, or only positive volatility that can be measured? So volatility is one of the main measures which are used to measure quality, and it can be constructed in various ways. There is no one right way of doing it. A lot of people will rank based on price move, and then have a overriding filter of volatility over it, and sort of adjust it based on volatility. So there are so many ways of doing it. So there's not one that I can really recommend here. Next one is from Suman Ghosh, AllCap subscriber. Happy with your service. Thank you. The current market seems to be range bound. Should we expect more churn in our portfolios? How do you see momentum strategies working in a range bound market? So we've been doing this now for 6 years with public disclosures, and almost a decade or more on my own account. So we've seen tremendous number of range bound markets ranging from 3 months, 6 months, 1 year, and periods of even longer periods, like for instance 2010 to 2013, and periods like 2015 till about 2016 mid. A lot of range bound periods. So within each range bound period there will be sectors which will do very well, there will be sectors which will do not so well, and the strategies should automatically churn out of those that are lagging and get into those that are doing well. In falling markets we'll definitely fall, but in range bound markets we may not do so badly, I think. So all the data from the past is available on the Weekend Investing Hub. So I would request that if you can go and do a bit of a research on when you thought that the market is range bound and what did each strategy do in that period. So that data is available, and that can be a good exercise to do. Next one is from Anil. सर अगर कोई पॉजिटिव रिटर्न वाले स्टॉक्स में पिरामिडिंग करके स्मॉल केस में एक्स्ट्रा इन्वेस्ट करता है कंपेयर टू नेगेटिव रिटर्न स्टॉक्स टू मॉडल पोर्टफोलियो का स्टॉक वेटेज कैसे मैनेज होगा और ऐसा करना सही रहेगा? सो द क्वेश्चन इज अबाउट पिरामिडिंग ऑन स्टॉक्स विच आर डूइंग वेल and I suppose taking out money from stocks which are not doing well. So it's a fantastic strategy, but as a strategy available for users, we cannot offer that, because it is a very individual sort of run strategy where the position sizing and the risk taken in each pyramid that you do will have to be very specific to your account. So while the strategy per se is definitely very, very good, how you can execute it over your own account with what kind of risk management, that you will have to see. But from a conceptual perspective, yes, I mean that is the way to go. Next question is from Saket. Saikat, I'm sorry if I'm pronouncing your name wrong. I am an active user of MT AllCap and it's been peaceful experience for me. So thank you so much for that. I just wanted to understand about the current invest more values of Smallcase. Earlier it used to be high, but from last 2-3 days it is quite low, similar to SIP amounts. So I tried to invest twice today, although invest more option, but the stocks and its constituents were different each time. So I think you have also sent us this query on mail and we have forwarded it to Smallcase for investigation. It could be some technical error in your account or in AllCap invest more technical thing. So we are awaiting to hear back on that and we'll respond back to you on email on this. This should not be happening basically. Yeah. Next one is from Ganesh. While doing SIPs, Smallcase suggests buying least performing stocks. Isn't it counterintuitive strategy with respect to momentum buyer winners? So you are right. The standard algorithm that Smallcase uses is to buy weaker stocks amongst all of them. So from that perspective, you are very, very much right. And suddenly invest more option amount has become similar to SIP amount. So this is pertaining to the same problem as the last query. So we've raised that to Smallcase and hope to get a response very soon on this. So to answer your first question, yes, it's an issue, but it is not a material issue that I've seen, because a lot of times even in momentum strategies there are periods where some stocks may underperform and then spring back up. So from that perspective, that may not be such a bad thing to do, but in general, yes, in momentum strategy you should be adding more to higher performing stocks, but that's how the platform is designed. Preetham has the next question. Any plans to launch AUM based fee products? So we have plans to do this. We are awaiting more platform ease in terms of collecting the fee on a monthly basis, and that will be get enabled once the UPI payment system is enabled on the Smallcase platform for AUM based products. Currently it is based on a eNACH banking process, which is very, very troublesome to the many users who are using it. So we don't want to get into that. But as soon as we have clarity over UPI based AUM fee collection, we'll definitely launch some similar versions of current products as an AUM also. Next one is from Alankrit. Kindly cover a strategy for lump sum investment. As you often say, we should try to bring in money gradually. If we have lump sum investment amount, and how many months shall we divide the entire amount? So this answer will have to come from your financial planner. We, by our license, are not allowed to offer any advice on this. But in general, I would say, if I were to if I were to able to get a lottery somehow and get a lump sum amount, I will spread it over 3 or 4 years. But that is just my thought. So you must take advice from your own advisor on this one. Amit has the next question. When are you starting a US stock momentum investing? Platforms like IndMoney app, Invested Finance are there now. So we are working towards this, and hopefully we'll make some announcement soon on this. Next one is from Anish. Can you let me know what is the max DD decline in capital one should be ready for if one wants to invest in your product? So Anish, again, please go to the Weekend Investing Hub. Assume that the max drawdown that we have seen, that may be crossed by, let's say, 25% or something like that in a worst case scenario. But of course nobody can really say, but that's what the thumb rule could be in terms of max DD, depending upon where you come in the cycle into the market. So Paresh has the next query. I have invested in MI20. The suggested portfolio size is 2 lakhs to 5 lakhs. I just want to know that I can't invest beyond 5 lakhs in MI20 via lump sum or SIP. So the way MI20 is designed is that it is designed for smaller portfolios to give more opportunity to smaller portfolios. So if you've crossed those limits, and if your portfolio is organically growing beyond 5 lakhs, there's no problem. You can keep growing it. But if you want to add to it beyond 5 lakhs, then the system will not allow you to do so. So there I would suggest that you could go to other strategies and diversify to other strategies so that everybody gets equal opportunity to invest in this. Next one is from Harish. If I miss a rebalance, will I have 2 rebalances in queue or 1 rebalance with consolidated changes? So it will basically, the small case algorithm will consolidate and give you 1 rebalance, which will be designed so that when you execute it, you'll come back as close as possible to the model portfolio. So you'll have 1 update for a rebalance, even if you miss 2 or 3 or however many. Next one is from Satya. I love your daily bytes. Can you explain on whether investors should file tax on long-term capital gain and short-term capital gain? So this part I can tell you that you must file tax, whether it is long-term and short-term or short-term. So that part is done. You should definitely file. And also, can you explain what all expenses additionally charged during rebalancing? Example, DB charges. So all the charges are, you will pay one time to Smallcase when you start the process, 118 rupees. You will pay to the publisher, Weekend Investing, the fee for subscription, 3 months, 1 year, whichever one you choose. Then on transaction, you will pay brokerage to your broker, you will pay stamp duty, you will pay SEBI transaction charges, you will pay SEBI turnover fees and exchange transaction charges. And on selling, when you do a rebalance, you will pay to your demat participant minimum of 15 rupees per transaction on sale. So these are all the charges, and then of course the long term and short term capital gain you have to pay. These are all the charges. So this is the end of the weekend investing round 22. Thank you so much for watching, and I hope you got some of the answers right. If in case some of your questions were not answered by me, please do write to us and we'll take another attempt at it. Thanks. Bye.